All right. Good morning, everyone. Welcome to this intraday strategy webinar. Today is Tuesday, February 22nd. Michael Boutros with you this morning. Great to see you in the room. Steve, Ziad, good morning to everyone. So it was an amazing week last week. We had some serious plays all across the board. Into the start of this week, the volatility is more towards the equity market. So despite what we're seeing on that side, the broader dollar majors are pretty range bound still. So there hasn't been much play on the majors, but we've got a lot to cover today, although not much of it has changed. So we'll take a look at DXY to start things off as usual. Sterling dollar, dollar CAD, Kiwi dollar, and the SPX from last night's update. We'll round it up with euro dollar, dollar yen, gold, and Bitcoin. And one last note on Aussie dollar from a report a couple of days ago. Any other questions or trade setups you guys want to review? Feel free to throw them on the message board at any point. Let's jump right in. So DXY, last update was right here on the 15th. It hasn't really given us much play. The basic focus was resistance right there into the yearly open, to that 618 retracement of the decline off of those January highs. Here's the weekly, guys. As you can see, the last 3 weeks have still been in this critical range. Again, initial support at the October 2017 high, which has been that nice lateral regions into 95.15. Key resistance to breakthrough, again, the yearly open, 96.50. 96.65 is the high week close, or the high close, excuse me, high weekly close from last year. And again, we got that 618 in here too on the intraday. So either way you slice it, again, big picture, we talked about the divergence in momentum right ahead of key Fibonacci resistance. You saw that median line offer, that kickback. And for the last 3 weeks, we've been in this critical zone. Again, it's important to note how important that support is. Okay, remember, again, we took this line all the way back from the 2011 lows. That's the original slope for all of these crosses, all of these parallels that we've been following for the last couple of years. That's huge, okay? So on the daily chart, DXY looks like this. Again, you didn't really get much of a monthly opening range here because the monthly open was just a straight shot right into the yearly low day close. That's 95.16 again. That's also the monthly opening range low. That's also slope support. The basic low, high, low we've been following off last year. Support, support, support. That converges on the low day close here at 95.15, 95.16. So that's bullish invalidation, right? Broader bullish invalidation. A break below that level would invalidate the monthly opening range, would invalidate that uptrend from last year. It would take you to a new break below the low week close, or low day close rather, at 95.15. Now, that's not my favorite scenario at this point. I'm still kind of neutral on this, guys. Here's what the scalp looks like from last week. Okay, no change. And again, that was written, what, on the 15th? No change. We were running right into this region. Here was the pullback. We found support. Here's the recovery. You're right slap in the middle of that critical range. So look, this might be one of those trades that the next couple of days just go sideways on you. I would say sideways to maybe even a little higher, okay, towards 95, 96.50, excuse me, that key resistance, yearly open. At the end of the day, the big event risk, as it were, for the dollar comes on the 25th. And that's going to be Thursday's core inflation. Remember, excuse me, that's Friday. Remember, the Fed's preferred inflationary gauge is PCE, the personal consumption expenditure. We're supposed to get the core read on that on Friday at 5.1%, which again is going to be a couple of decade highs, right? PCE headlines was coming at 5.8%, right? That's what we got previous read. So that's going to be the major event risk, sadly, for the week, although it is a shortened holiday week. Yesterday was President's Day here in the US, so markets are just coming back online. Want to see how this opens into the US trade session, but at the end of the day, guys, this is the key range, okay? Until we get a definitive break of that, I'm kind of neutral on this. Now, I usually take a quick look at the euro, but I guess I could just do that really quick for you. Here's what the euro looked like. So that's number one. Euro is number two. Here's what the euro looked like last week. okay, on the 17th, straddling that 38.2. We've kind of scratched that since then, but the basic picture of this, let me take you back to the weekly first. Okay, big rebound on divergence off downtrend support, saw this breakout of last year's channel. All right, now really was a pretty clean breakout. Obviously into the start of January, you poked above, but on a closed basis, pretty rock solid, right? And that's the breach. If this breakout is legit, 112.64 needs to hold. And that's been the same level I've been talking to you guys about for the last 2 weeks. It's the 618 of the yearly range at this point. And we're gonna need to see that hold, converges on former channel resistance if we are heading higher, right? We got that momentum trigger sitting on that trigger as support. So it's the same exact picture as DXY. There's a lot of, what's the word to be said? There's a lot of back and forth. You know, we haven't gotten much directional bias from momentum in the intraday charts. It's been a little bit of a bearish play here, but there's the break of near-term uptrend support. Checked it as resistance, but we didn't even break that low. Ever since here on the 14th, I was telling you guys to look for, you named it, 12.64. Here's the first miss. It looks like here's the second miss. That needs to be a sort of a base support for this if euro is heading higher. The daily chart has us, again, right ahead of that 618. This pitchfork, which is off of last year's high, low, high, has us at resistance right here. So very similar scenario where on the daily, you would need to breach through this. On the DXY, you know, you'd need to break below the yearly open to get this thing going, right? Here's DXY in the daily. I didn't show you this one. Range bound. So euro is no different, okay? We'll look for some clarity on this. I would love to see a euro breakout. As you saw, Jamie's swing, I think we might have got stopped out at that 113 level, but I still think it has merit, all right? And we're looking for a larger rebound here in euro. So DXY, euro, similar scenario on both of them. Looking for some clarity as we open up the week. Hey, Ty, gold, I got. Silver, I don't got. NAS 100, S&P, I got. Okay, let me hit those as we get through, okay? $10 and 30-year. So I don't have anything on the 30-year, but I think it is worth looking, Ty, at the 10-year. Here's the chart I've been showing you guys for the last couple of months. It's insane. It's insane. The clarity and what's been going on with rates. It's funny because just a couple of weeks ago, I'm not going to name names. You know, there was someone on Daily Effects saying you can't do technical analysis on rates. It's doing an analysis on a derivative, and all of this nonsense. Hey, man, seeing is believing. All right. Upper parallel, perfect catch of resistance. Last week, we talked about this zone needing to hold support because that was resistance on the way up. We sat there for a day. We broke lower, just missed a basic 236. I was talking to you guys this last week, if you remember, right at the median line. So look, if today closes northbound of 194, that would be encouraging, or that for the bulls at least on rates. They may see this higher, but this is still your near-term bullish inval tie. On a daily close below 184, I think rates start to fall apart. You got that's a rally in yield in treasuries, right? In price. So we're at a pretty major pivot here, but it does look like it just rebounded a hair ahead of uptrend support there. Does that help, Ty? I suppose we're gonna have a similar scenario here. Although not quite the same slope. Let me just see what this looks like. Bear with me one sec, guys. Okay, too steep. So your basic low, high, low has us basically like scratching resistance last week and then failing and near-term embedded channel puts support right at that high reversal close. What was that? The January high day reversal. Wow, that's pretty stellar. Woo, all right. Near-term support, 22.18, let's call it. Okay, Ty. Major critical supports right here. This is your monthly open. It's a 38.2 of the yearly range. Actually, this is the rally off last year's low. That's December. That would be pretty critical. But near term, stop traffic. You're there right now. Yes, bloodbath worldwide in bomber bonds, in bomb ER bonds. So yeah, I think I wouldn't rush that yet. This whole thing happening again, putting the humanitarian thing aside, looking at it from a market standpoint, does have definitely the propensity to roil markets. Look, the biggest thing, again, looking at this from a market standpoint, not political or anything. This is going to be bullish for energy prices. This is going to increase inflation. Okay, you've already heard today that Germany has essentially said they're not going to allow the certification of Nord Stream, the Nord Stream 2 pipeline, which is the first sort of blowback, right, from the geopolitical tensions that have been coming out. But that's going to be kind of problematic for Europe as energy prices start to go up. Here again, we're no longer energy independent, so we're not one of the mass exporters as we used to be. So we're going to be, you'll see it in the concern over inflation is what I mean, Ty, right? And I think that will start to kick in eventually, but you're seeing, yeah, the yields have just been doing some pretty radical moves over the last couple of days. All right, so I'll stop there. Sorry, you took me on a tangent. 10-year and 30-year, Ty. That was 3 and 4. Okay. All right, number 5. Let's jump right in. Here is Aussie dollar. First on the weekly chart, and here is our last update. Oh, excuse me, on sterling. Getting out of play here, right here. Now, the sterling pullback has been an interesting move. Where's the 21st? Right here. The sterling pullback has been an interesting move, basically because of where it was rallying into. And the high we close at 36.76 is what we were looking at right here. You had 36.74, which was the 2020 yearly open right there. This year's high week close, it's the same exact level. Key resistance. Just above that, you have the 52-week moving average, downslope resistance, right? So the focus for me was, let's see what happens as we get up into that region. This is the breakout zone, no doubt about it. If we make it through the high day close, we make it through that 52-week, you're looking for 38, 30s and above. But we're kind of running into resistance now. So what's the outlook from there? Here's what the daily chart looked like. There's 36.75. There's a 3-point trend line resistance. Here's your objective monthly range highs. So anyway you slice it, we were looking for some sort of exhaustion or a breakout. It had to be one or the other. I didn't want to see kind of meandering price. I wanted to see a nice inflection. Didn't get that high, and today we're seeing weakness back below the 618 of the yearly range. So what does that mean? Maybe a little bit of a setback. 35, 34.66 max. I don't want to see any losses beyond this if we are heading higher. Here's what again, let me just show you the 240 and zoom this out for you real quick. Here's sterling, and here's what sterling looked like, right? Nothing's changed. Essentially a little pullback here from last week, faltered right ahead of 2021 again, and the pull lower here. Yearly open support, 35.30. Again, max drawdown if we are heading higher. Don't want to see anything beyond that. Haven't touched this one as a disclaimer, and the biggest apprehension for me is because you're running into that major resistance. If you had the guts and you pulled the short, last night was a perfect opportunity with a stop against the highs for the month. You're looking for 35.30s, your first initial, yeah, I see you. Your first initial level right there, okay? I wouldn't necessarily stress 35, but it's a big figure. and you've seen inflection there. That's why I leave it there on this chart. I don't typically stress 50% retracements, but again, it is the big figure. This is your max drawdown. Okay, as soon as you hit 35.30, I'd be bringing my stops to break even, taking a little off the table. This is the next major inflection zone. All right. Questions on sterling? No major UK economic data prints of note this week, so look for the US dollar on that one. Dollar CAD was the next one on that report. And another one where, unfortunately, all my setups today are not as exciting as I usually would want them to be. Another one, guys, where we have to wait for the range breakout. Okay, we're gonna start talking about Kiwi and some of the SPX in a minute, which has some moves, so sit tight. But what the heck is up with this consolidation? Here's dollar CAD on the weekly charts, right? The last 4 weeks have been blah. The only major thing you want to focus on this chart is key resistance at 27.69. It's the 618, the decline off of last year's high. And last year's high week close is 28.14. That's your critical range of resistance. That's what has capped the advance, again, for the last 5 weeks, if we count this week. So, risk for a near-term setback? Absolutely. Ultimately, do I want to kind of look for a major basing into that lower parallel? Yeah. The longer this holds, the more effective, the larger, I should say, the breakout when it inevitably happens. But as it stands right now, we're right below weekly resistance. So here's dollar CAD on the daily chart. Monthly opening range is preserved. If you look a little tighter, this is actually, looks like it may be a contractionary range, which is what I told you guys last night, right? A range within a range. I'll show you that in a moment, but here's your series of lower highs. Here's your series of higher lows minus that outside reversal that we made there on the 10th. But largely speaking, you're in a contractionary range right below the 618 retracement, again, of that December decline. Look for a breakout here, guys. Look for a breakout here this week, hopefully. Here's what it looks like on the intraday charts. It's a 4-hour. So a range within a range. Here's your January open. Here's your January highs. The January lows. We're still in the January opening range for the year. Here's your contractionary range within that range. All right, so 2640, 2665, that's the start of the support zone there at 38.2 of the monthly range. But largely speaking, that's your key support zone. If that breaks, 2580, looking for slope support, be looking for a larger basing here. Remember, on the daily charts, well, that is on the daily charts, but on the weekly charts, that's also going to entail, again, that 52-week moving average, so your yearly moving average. And I'd look for a low there. All things held constant. If we break higher, steady as she goes. 28.53 is a soft target. You're looking for the rallying to the high day close of the year, and that's 29.38. So again, typically these contractionary ranges, guys, wedge patterns, triangle formations, oftentimes are resumptive, not terminal for trend. So all things held constant, you would kind of still be looking higher. That said, the dollar's under a lot of pressure. Inflationary major, the Fed's preferred inflationary gauge is coming on Friday, and if we break below the yearly open, this could slip pretty quick. So another range to keep your eyes on as we get through this week. Not much data out of Canada either. So again, watch for US price action to drive here. Kiwi dollar in an interesting scenario. I wrote about this last night because we have it coming into a near-term resistance target we've been looking at. Here's what it looked like last night. So the basic level that we're focused on, let me take it to the weekly charts here. The basic level that we're focused on is this 2020 yearly open, and that's 67.33. We're trading just a hair above this right now. If we're able to manage a weekly close above this level, that would be an objective break of downtrend resistance. You look for a resumptive, not a resumptive, but a more larger corrective stance for a higher moving Kiwi. But as things stand, the focus for me is what do we do here this week? So watch the weekly close with respect to that major pivot zone. Daily chart looked like this. 2020 yearly open, just higher. Confluence of the 38.2 from the decline and the 100 off the low. Here's what it looks like now. And that's your next level up. Here's your yearly open, 67.33. We're trading just a hair above that. That's your breakout zone. So we're still in the downtrend. We're coming off of downtrend support, false break scenario here. On the rally, looking for possible exhaustion this week into a stretch towards 67.90s. Maybe just ahead of that basic slope off the highs from October and November of last year. But it's one of those trades where, you know, it looks like could be a clean breach of the monthly opening range high. It would have us looking for a late month high. And again, that 67.90 level just matches up so well. Okay, it's the last full week of February trade. Monday is the last day of February. So those monthly opening ranges should be given way here. Here's what the intraday chart looked like from last night. Here's what it looks like now. Here's the 120. So we're just a hair into that 618 retracement. Again, here is the update. Our near-term support that we noted last night was 66.83. Just below that was a 38.2 of the drop. We said to look for support there if Kiwi is heading higher. We dropped right into it last night and rebound. I've removed that 38.2 because obviously we have a new high now. So the retracement into that high is null and void. But you can see again that Thursday, Friday low caught the opening range low for the week yesterday. Here's the second bounce. Here's the breakout. Look for inflection here. 67.52, 67.53. You got some slope, but that's your big whopper. 67.90 on the upside. All right. Yeah, at this point, yep. At this point, you can raise bullish invalidation. Well, it was there anyway. We didn't necessarily have a bullish inval on this yesterday, but we were looking for a exhaustion low there, and that's where we got it. So yeah, I'm pretty comfortable bringing that here as our bullish inval for the near-term trend. Also, don't forget that this is the objective weekly opening range lows. Here's your objective weekly open, 66.90. So either way you look at it, it's a beautiful spot. I'd be comfortable putting that, yeah, that's my near-term bullish inval, sure. Any questions on New Zealand? All right, that is number 7. Number 8 here is SPX. So I put a piece out. I put a piece out on this on Daily FX last week, over the weekend, and it got like 100,000 page views. I went viral basically. So look, the technical clarity by my part on SPX, and you guys have known very well, has been very clear. The breakdown ever since the beginning of the year, the onset with the outside reversal candle was the tell. The second tell was this major breakdown into late January, which took you through the first break of uptrend support from the original slope since 2020. We came back, tested a 618 of that range as resistance for 2 weeks and pulled lower. Last week, we closed below the 52-week moving average. Okay, and we sat right there. Here's what it looks like on the line chart. This is the trick out zone. This week is going to be pivotal. You want to clean up your positioning at this point. If you're enjoying that short with us, well then great. Here's where you want to get a little more defensive, okay? Obviously, we'll revisit this chart on Thursday. This is the weekly chart, so nothing really matters on this till the weekly closed. Excuse me, but the daily levels still are outstanding. Here's the daily chart. No surprise to see a rebound here. I wanted to see 42.45, but maybe a little bit of a recovery here isn't all that radical. So again, I'm gonna get rid of this 618 at this point, and let me just bring in the 38.2 of the yearly range. Okay, so near-term bullish inval last week, or bearish inval, excuse me. Last week we had the monthly open. Right, we said to look for a high ahead of that. If we're heading lower, we turned right ahead of that level. Again, exquisite performance. Pulling lower, here's the rebound off of downtrend support. Wouldn't be too surprised to see the recovery get a little bit larger. A 38.2 of the yearly range, okay, gives you like 44.50s. If we break, that's the breakout. Let me just put that out there. If we reach above that, I think you've invalidated the downtrend and we start to look for the larger resumptive move. Till that happens, it's all noise. Even if this recovery makes it all the way into 44.30s, 44.40s, it's still within the confines of the broader downtrend. So unfortunately, it's going to be a while before we're able, with any type of conviction, to call sort of a reversal or an end to the bloodbath that we've been seeing, to put it in your words, Ty, in the equity markets. On the intraday chart, man, looks even cleaner. Here's what the intraday chart looks like. All right, I'm going to bring this into the 4-hour. Guys, this is the same formation we've been following since early January. Here's the high, low, high. Seeing is believing, right? You got a little bit of a false break scenario on the downside, which held at the May high for the recovery. Once we rebounded off of downtrend support, we're looking for a rally towards downtrend resistance. We got that. Again, beautiful fib. Even with that false break scenario, ran right into that fib, failed right back down again. Here's the break back below the 75% parallel. Test of the median line. Here's near-term resistance. Okay, so that's 43.63. That's the level I put on the charts last night, if I'm not mistaken. Yep, 43.63. That's near-term resistance, near-term support. That's the key target we haven't gotten below, the May high. You might ask yourself, well, what's so special about the May high? Really nothing, except it was a really nice pivot in price. So here was resistance, breakout, instant support. That's where we probed on the last drop. That's the level we need to get just a basic 236, right at that 4,200, right? 41.97. So what does that mean? Near term, I think you could see a little bit more of a recovery in stocks. You know, we're not out of the woods until we basically clear that 38.2 right here at 45. Let me bring it up here on this chart as well at this point. Right there, right? That's your near-term bearish invalidation, but it's also an area to look for possible exhaustion. We're gonna make a move lower. This was just a break of support. Maybe check it as resistance for that final stretch. I don't know. What I do know is near term, not surprised to see this recovery. I'm looking for upside exhaustion for the resumptive move lower. Questions on SPX? Now, there's a lot of catalysts in the headlines that can offer sort of a kick to this, whether it's, you know, what's going on in Ukraine or Russia, or whether it's the inflation read that we get on Friday if that goes berserk. But it's not such a rosy picture all of a sudden for the global sort of growth story. And I do think you're still at risk here in SPX. So look for upside exhaustion into one of these two levels early in the week. Questions on SPX? All right, that's number 8. Number 9 is, I guess, appropriately, dollar yen. This is on pace as it stands right now to mount an outside day reversal off of the monthly lows. Big mouthful there, but let me just take a quick step here. So from the weekly charts on dollar yen, it's been a mess. I've been showing you guys this since the beginning of the year. Nothing's changed. All we've added was the yearly range lows, which was near 1350. The yearly range highs is still on par with that August 2015 swing low. It's 116 proper. And you've been just doing a whole lot of back and forth. Now, the near-term picture looked interesting last week. Here was the dollar yen on the daily. All right, it wasn't an outside day reversal, but it was a pretty sizable reversible candle there, right off of the yearly high day close. And again, that August swing low. Kicked it lower. Here's the weekly open, monthly open. We broke right back below that. The 618 held support. And today's poised, like I said, to mark an outside day reversal. Watch the close, but if it does, that would be a near-term reversal pattern and would suggest, hey, maybe a little bit of a relief here to this multi-day breakdown that we've been seeing in dollar yen. Either way, here's dollar yen on the intraday charts, and here's what I showed you guys last night, or I guess this was the previous update. Here it was on the 17th. Okay, so we got into that key region of support, 1456, 1454. That was this level. My favorite Fibonacci confluences, I tell you this all the time, 100% extension off the high, 618 retracement off the low, 114.55, perfect touch. Probed a little bit deeper, 5 pips, give me an allowance there. Here's the recovery back into the weekly open range high. So watch this. This is also your yearly open, 1509. So if we're able to get through last week's open, I just have it as an arbitrary figure. Let me remove that. There's a 38.2 there just to make things a little bit more objective. Okay, there's a 38.2 there at 1520. So if we break through that near term, it would be a near term breakout of that descending channel from last week, 1560s. Okay, forget that 786. I'd be looking at this and this, just a bit higher on that median line near 1580. All right, bullish invalidation for the broader recovery that we've been following, this pitchfork off the lows from basically December and what was that, October of last year is down here. And again, that's objective stuff. I love it. That's your objective February opening range lows. Again, slope support, bullish inval. All right, questions on dollar yen. Watch this one. Well, we'll talk again on Thursday ahead of that core inflation read, but I'll be watching this one closely this week. All right, that's number 9, dollar yen with outside day reversal. Gold, number 10. Here is that yellow metal that everyone's been talking about. So here's where things get tricky. Gold has been a breakout, loved the breakout. The breakout's coming into some serious resistance. I think you got to chill here, okay? You got the high close from last year. That's 1903. Okay, you can't see it because we're there right now. 1903. Just above that, you have the 618 from the decline off the 2020 highs. This whole stretch. Didn't get there on that last year stretch. Here we are now. So from a weekly standpoint, we're in the resistance range, plain and simple, right now. Longer term traders, you're like watching this one like a hawk. Okay. Intraday, or let me go back to the daily, maybe a little bit room for a spike higher. Again, this is the big zone you're looking at the weekly charts, but from the intraday standpoint, from the daily standpoint, the high day close from last year, that outside reversal that we made right into the open of 2021, the highs that you made in June of last year, the 618, 1922 into 1918. So it gives me a little bit tighter of a range, just higher up. Don't know if we make it there. You're not getting divergence on the daily chart yet, but it looks a little tired, right? So look, if you're longer term, you're still waiting for that 1920 clip, I think. Near term, the risk for exhaustion is starting to materialize, and it looks more apparent on the intraday chart. Here, you are getting ongoing divergence all throughout last week. Again, this is the 4-hour. Here's the 2-hour, right? Same shindig here. So the momentum is starting to look a little bit faulty. It's starting to look a little bit waney, right? But I think you just play this as objective as you can. The weekly opening range is well preserved. If you get the top side pop, I wouldn't necessarily be chasing a high. I'd be looking for a reaction here. A better area for gold to find a stronger inflection, possible near-term exhaustion. The trade remains constructive above 1877, plain and simple. If we make it back below this basic trend line, if we make it back below that 1877 level, I think you see a larger spill. Again, that would be in a scenario of sort of dollar strength, you would imagine it. But all things held constant, looking for a reaction here. All right, now if this breaks, it might be a straight shot to 1950. I really don't have anything in between from a technical standpoint. So bottom line, into the start of the week, into the close of the month, looking for inflection in gold into 1918, 1922 specifically. Watch this chart into the close of the week. All right. I think it'll be a larger tell for us. Any questions on gold? Again, no change to that setup from last. Again, this was back on the this was on the 17th. Let me just show you side-by-side comparison there. So we came into this level, started to falter, and you can see how this is getting kind of messy. That's still key resistance. That's now key support. Okay, number 10. Number 11, really quick, just a quick touch on it. I don't know how many of you guys are messing with the crypto block here, but looks like we may be in big trouble. The level I was telling you about earlier in the month was right around 43,000. I want to say it's 47,900, right? Let me just take you to the chart right here. We need to find support. Oh, 42,000, 43,000, right there. Trend support, uptrend support. Here's the daily. Let me just show you this. That needed to hold. It didn't. We broke the near-term ascending channel. We broke now below the monthly open, and here is your monthly opening range lows. Okay, here's your monthly open. I never dropped a marker here. Here's your February 1st open. So watch for a reaction here. Ultimately, you would need to break below 35,000 to get resumption. You're looking at 32, 28 at that standpoint. Things get really messy if we break these lows, guys. So you can see even last month on that dive, we were looking at that same region, really messy, but from a response standpoint, that was a perfect rebound. That's the level. So that's still the level, okay? So watch for a reaction here this week. The immediate decline needs to find support ahead of 35,300 if this thing is going to hold. Okay, so that is Bitcoin. Just want to touch on that. Last from my end, and then I'll go into your questions, guys, if you have any. I see you, Ty, on those questions for Nazi. I'll get to that in a moment. Is Aussie dollar. This is number 12. Aussie is, it's not as clean as, or I like to say it's not as clean as Kiwi. I think the Kiwi levels were a lot cleaner. That's why I presented that to you last night. But from a weekly standpoint, there's been no other trade this year that has given us the most definitive inflection off of critical support. And that level, my friends, was 70, the 70 handle into 69.90. I've been talking to you about this for months and months and months about how critical of a range that's last year's or the 2020 yearly open, major pivot in price. The 2018 swing lows, it was the 2019 opening range low for the year. It was the highs for the opening range highs in February 2020, huge level. Here's the start of this year, plummet into it, and here's a 4-week, well, this week would be the 4th week rally off of that key zone. From a near-term standpoint, the ascent had a lot of back and forth, but it was a one-way directional trend. Haven't failed that weekly resistance yet. The yearly open comes in at 72.70. That's key resistance, so we're not quite there yet. That's the weekly chart. Aussie on the daily chart, not as fun, right? Not as fun. You know, your weekly or monthly opening range never really gave you a clear range. Here's the monthly opening range, so you're still there now. It did, you know, kind of pivot along that median line for a little bit. You saw the lows there last week, swing high, right? But at the end of the day, it's been kind of a, I don't know, it's a boring trade. Here's the intraday. Decent move on the rally, but last week, just a lot of push into a high and then failure. Here's this week, monthly range highs, still there. So ideal scenario, again, my humble opinion, I'm looking for a drive towards 72.70 on this one. It would kind of bear well with the dollar week story. Here's your weekly open, which now converges on the weekly opening range lows and uptrend support. That would need to hold if Aussie is heading higher on this slope. So you've got the RBA interest rate decision on tap next week, actually into the close of the month on Monday. So definitely take a look at this as we head there. But At this point, I'm just looking for a weekly opening range break. If it breaks higher, 72.70, big inflection zone, that's this year's open. Major resistance in 73.40 on the upside. Again, a 618 off the high and 100 off the low. My favorite Fibonacci confluence. That's way up here. First things first, though. Let's just get a basic break of the monthly, the range here. Aurelian saying, I heard a click and noise went off. I'm not sure if it's on my end or yours. Guys, can I just get a quick sound check? Make sure it's not on my end. All good. Thanks, Rohan. Appreciate it. Okay, may have been just on your end, Aurelian. So that's Aussie. Let me jump into the rest of your questions now. You wanted to take a look at the NASDAQ 100. So I look at the NDX. You got me looking at this, actually. So welcome. Here it is. Daily chart, intraday chart. Man, it's almost as clean as SPX, but the SPX is a little bit different in that the formation looks a little bit clearer on the interior levels. Here's what NDX looks like. At the end of the day, this is at Fibonacci support. Remember, the 618 for this one, we've already broken. I already removed it off here. Here's the 618 on NDX. 13,950, 13,948. Okay, that's the retracement of the 2021 yearly range. Right, here's your yearly open, last year's low, last year's high, 618, decent pivot in price. So Rohan, or excuse me, Ty, on this one, you're at support right now. You're at support right now. It's actually a support that's been tested 3 times this year already. So a little bit different of a picture, you know, where if you break here, the lower parallel actually converges way lower. That gives you a drop towards 13,180. But I'd be watching, you know, the risk for exhaustion here on this 618 retracement for sure. I wouldn't be chasing these stocks lower. If it's going to be like this, we're coming off the median line, there's some recovery. NDX might get a little bit of a breather because it's coming off of key fib support. But at the end of the day, near-term resistance here now drops towards those lows you made back in July and October. The decent pivot in price. Here's the February open. That's your opening range low. Now resistance. Now break down from here, watch that slope, and then support. Does that help? All right, cool. Aurelian says I logged off and back in. All right, cool. It seems like it was just on your end, Aurelian, because we were good on this side. One other slope, you know, I've been going back and forth with this. I just want to show it to you. One other slope that I was really working with was something like this, with an extension just off the high, which basically says we failed ahead of the median line, decent pivot there, support again. My point is, when you get all these sort of different interpretations of slope, when they all converge on a level you're watching already, it just gives you more conviction on it. So I'm looking for inflection off this one basically today, Ty. He says, yes, all right, awesome. And I got you on the 10 and 30. Oh, crude, that's the only thing we didn't cover. Here's crude, oh, by the way, silver, I'm sorry. Nothing really to add about silver. I'm not really a big silver trader, but major resistance, same level we were talking about last week when it broke back above that 2350 level. We haven't really reached into yet. The high day close for the year gives you 2446. So a level to be watching. Beyond that, you've got the high day close from November of last year and a pivot from the March low week close, a whole big region, basically just below 25. But at the end of the day, this one is as range bound as can be. So keep that in mind. We're coming to the upper end of that range right now. But the bigger, more exciting one I wanted to show you, what was the other one? Go, crude. Where am I? Oh my goodness. So guys, this is still absolutely critical. Here's oil. This is insane. Obviously, we're in an uptrend. As I already told you, my humble opinion is, and I've told you this from the beginning of the year, is that energy prices are going higher. Just the geopolitical backdrop, the political backdrop, whatever you want to call it. Oil prices from a thematic fundy approach are heading higher. This slope is now the 4th consecutive week we've been testing that as resistance. Now, again, the longer it holds, the bigger the break. We've been talking about the ongoing divergence in momentum all last year. Even if you remove this subjective slope, here's the objective trendline resistance off last year's high. It's the same gradient. So oil's at resistance. I'm not like the popular guy saying that, because you still see, oh, $100 oil on every single newscast, whether it's financial publications or regular news and publications. I think that's partially what's kind of capping the advance here, is that sentiment has swung so one directional. So look, I'm bullish. We're at uptrend resistance. That's all I'll say. 85.61 near-term support, near-term bullish invalidation at last year's high week close. If we break back below 83.28, maybe you get a massive correction, but you're still bullish, broadly speaking, above this year's open. So whether you're holding longs or whether you're looking for new positioning, watch this major resistance. Can we short here against the current high, Rohan? So if you're looking for an intraday position and you're not positioned yet, that would essentially be the play near term, is off this high. Divergent, right, Rohan, we've talked, again, I've noted this divergence since last year. If you've been trying to short crude all year because of that, it's been a rough couple of months. Divergence tells you when momentum is waning, but not necessarily a time trigger. So I take that with a grain of salt at this point. But if we break and close above this slope and momentum closes above that slope, that's even a bullish trigger, an even more bullish trigger. You'd expect to see a rip in that scenario. But all things held constant, we're at uptrend resistance. Guys, here's the daily chart. Don't take my word for anything. Here's the daily chart. Also, divergence, higher high, equal highs, above 70, so a weak signal, but it's there, into the upper parallel. You got one daily close, fake out, above that before it closed right back below. So take it for what it's worth. You're at uptrend resistance. Any positioning you would try, if you want to take a near-term position, Rohan, against the high, here's what the slope I've been showing you since last week, no change. Here's the high-low high. Here's uptrend resistance and near-term downtrend resistance. Any shorts you have take would be against that high. Okay, near-term support 90.68. A break below that. That actually is, even if you bring up here, even if you bring up a near-term retracement, look where the 618 is, 91.20s, let's call it. So this key zone would be your sort of key support zone. I'd look to wrap up the short, but yeah, it's a test of uptrend resistance, guys. So it's been pretty clear as far as levels are concerned. It's just an exhaustion trade on any pullback that you play. Obviously, like I said, if we break this high, you should see an accelerated rip. There's really nothing to stop this beyond 100. It's just 100, by the way, guys, just a rounded figure that everyone looks at. If we take a look at the weekly charts, I just have it there for that purpose because it's been a decent pivot in price, but it hasn't really capped any advances. Maybe this one advance, but inevitably we even came back to break through. So look at it as a pivot, not necessarily as a ceiling, right? So if we initially run right into it and pull back, I'd still be looking to fade that weakness for the break higher. But all thing held constant, like I said, first things first, we're at uptrend resistance now. All right, that's gonna wrap it up on my end. So interesting start to the week for sure. FX has kind of been a little boring, so let these positions come to you. The dollar CAD breakout of most importance I'm looking at, and some of these majors that are continuing to consolidate. Kiwi running into the highs, Aussie running into some possible resistance. Keep your eye on that gold rally. Again, I didn't really get into detail about the silver mechanics on the longer term chart, but you're basically looking at the same type of major resistance at the 52-week moving average. So possible exhaustion on all these trades that have continued to stretch. All eyes shift to Friday's core inflation data here in the United States. So we'll get another update here on Thursday. Till then, best of luck trading. See you guys on Thursday morning. Cheers.